scalping for profit with EMA and RSI. A moving average is just that. It is an average of price over the past so many periods or so many days. So if you see a 10-day moving average, is the average of price over the past 10 days. A 50-day moving average will be the average of price over the previous 50 days, and so on and so forth. And it is a lagging indicator, and a moving average is an indicator that you can put on your charts. And so having them on our charts helps us to understand average price and where price action is in relation to average price. And so what does a moving average do for you when you have it on your charts? It helps inform you of the direction of trade. So as traders, we're always interested in the trend. You've heard it, let the trend be your friend. But you gotta know the trend, right? Is it uptrending? Is it downtrending? Is it not trending? So when it's not trending, it's kind of just hanging out. I like to use the term hanging out. It's not going up, it's not going down, and it can go on that way for a long time or a short time. So the moving average informs us of which direction the trend is going. Number two, it informs us of possible entry, and I should say entry and exit points. So that's what a moving average can do for you on your charts. Another thing a moving average can do for you is it can inform you of possible reversal points. So of course, if you're in a trade and you're going long in a trade, meaning you're profiting from this trade with price increasing, you want to know when price stops increasing and price begins to decrease. Moving average is a good indicator that can inform you of when this happens. And I'm going to demonstrate all this on the charts later on in the live stream. So stay on this stream till the end. And don't forget those likes. Okay. The RSI, on the other hand, where the moving average is a lagging indicator because it shows average price from previous periods. The RSI is a momentum indicator. So what it does is it shows that, just like I wrote here, it measures the magnitude of recent price changes to evaluate overbought or oversold conditions. So these two points being the point of being overbought and a point of being oversold are two setups that can inform us of how we want to trade. So that's my first slide, second slide, third slide. So the moving average, and I've put some colors in here. So when we see green, we're talking about going long. And when we see red, it's about going short. So the moving average, all in all, yes, it shows you the trend. It also can inform you of entry and exit points. So you want to enter into a long position when you have a cross. And here I'm calling it a golden cross because I need to call it something other than a cross. Technically, a golden cross is, I believe, when the 50-day moving average crosses over the, I want to say the 200-day moving average. But a cross is a cross. A golden cross is simply saying price is operating above the two averages. We're assuming we have two averages on our charts, and we'll go into the averages that I use on my charts. So when price action is operating above your two moving averages, then price is trending upwards, and the point at which they cross over is always a good point at which to get into a long position. The converse is the case if you like to short your trades, then you're looking for a death cross when price action is below the two moving averages. Again, I'm going to indicate that on the charts. On the other hand, with the RSI, the relative strength index, we're looking to enter into a long position when there is a cross above the 30 line, and we're looking to enter into a short position when there's a cross below the 70 line. So I'm going to go to the charts just to try to simplify all that. Is there any other line here, which is the 70 RSI? And you will have a lower band, which is the green down here, which is at the 30 RSI point. And as price action is ongoing, of course, you see price movement on the RSI up and down within the band. So we're going to correlate the move of our RSI with price action. So you can see as price action moves upwards, so what's going on is there's a lot of buying action. This is an upward trending market. Two things to note: price action is completely above those two moving averages. And the moving averages I have on this chart, and I tend to do a lot of my day trading with these two moving averages, as the 10 EMA and the 20 EMA. EMA, by the way, stands for exponential moving average. And that's the one I tend to use as compared to the simple moving average. Okay. Now, so we have a nice uptrend, right? And you've been in this trade and you want to know when is a good time to exit the trade. Okay. So we're going to keep an eye on our RSI. So RSI moves, you can see it's moving up above the 70 line, the red line down here. Up, and then it comes back down, it crosses above, and it crosses below. What we're looking for with the RSI is we're looking for a cross. A cross above is like keep a finger over the exit key. It's crossed above. Now, once it crosses above, it's saying there's so much buying that we have entered overbought territory. We want to know when to exit the trade. So once your RSI moves into overbought above 70, it's time to begin to exit a trade. Now, if you're a newbie trader, you're a conservative trader, then I will say, okay, as soon as the RSI peeps above or even gets close to the red line, the 70 RSI, exit your trade. You're super conservative. You're super new. You don't even want to lose money. You don't want to, you see some profit and you just want to take it. Yeah, you can take it as the RSI line crosses above the red line, okay? But really what's going on is RSI can stay above this red line for a long time, meaning we're overbought and we're staying overbought and price is still going up. Price is still going up. So within the space of this rectangle up here, you can see there was still some upward movement. You want to begin to think to exit your trade when the RSI crosses back below the 70 line. You want to confirm your RSI with the moving averages, and I have highlighted here the death cross. So after the RSI drops below the overbought line, you want to begin to look out for this death cross before you exit your trade. Now, like I said, if you're super conservative, don't even wait for any confirmation. You see overbought, you jump out. But if you kind of want to push the ticket a little bit, you want to get a little more profits, you want to stay in for as long as you possibly can, stay in. And of course, you're always going to have your stop limits, right? So assuming if you enter the trade way down here, you've got your stop limit somewhere down here. And hopefully you've been moving your stop limits up as you have continued to upward trend. As you see the cross, this cross, which we're calling a death cross, then you see price action dropped below the two moving averages. That is the confirmation. Okay, now, so that is using the RSI and the moving average to inform our exit. Over to the right side here, we have RSI has dropped below the 70 and it's within the body of the 70 and it comes all the way down to the 30. So ideally what you're looking for is you're looking for a drop below the 30, which shows a sell-off. There's like sell off. Look to the left. Sell, 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 sell. Price dropping, sell, sell. And we have that RSI all the way at the bottom of the 30 line. And hopefully before this sell-off, you got out of your trade when RSI crossed below. Over here, we've sold off for a while. You're waiting to enter into a position at this point, right? And in this case, RSI line comes down to 30. It does not break down below 30. So I'm just showing another scenario. Yes, it's good if it breaks below the 30, where it's being fully oversold. Price is dropping and has dropped to the bottommost. But the fact that it comes down to the 30 RSI and bounces back up is as good an indication of it crossing below and crossing back up. And so again, we want to confirm with a golden cross this time. Okay, so now we're looking for price action to go above the 2 moving averages, and that happens, I will say, this is a 1-minute chart. So we get the oversold reversal, this V shape down here, and that's a good sign that the trend is changing. Okay, but we now want a sign to actually enter. And so after we get that RSI signal, we have 1, 2, 3, 4, 5, I would say 6 minutes later, maybe 7 minutes later, then we get a golden cross. That would be the point at which I would now enter into my long position with your stop limits, of course. And so you enter into your long position. You can see price action is all in all above the moving averages. We see it kind of dribbles down below the 10-day moving average. But like again, I said, if you're a really conservative trader, the minute it touches, say, your 5-day moving average or your 10-day, your lower moving average, you may want to just get out of that trade. This, guys, is how you scalp. There's just one more thing I want to mention, and it is that your moving average is like a dynamic trend line. Now, when you draw a trend line, you're drawing it based on your lows and your highs, and you have this hard line that you extend over the future trading period, right? And then you want to enter or exit your trades based on if price action is below your trend line or above your trend line, right? But with your moving averages, they act as your trend line. To the left of the screen, we see the 20-day moving average. You see it right there, right? That 20-day moving average, that is or can act as your dynamic trend line. So meaning price action is operating below it, perfect. You're staying in your trade until this baby here, this huge big green candle crosses above. It breaks the trend. You're out of your trade again. So, and you can see this happens even before any cross. There's not quite a cross here, but price has broken the trend. Remember, again, the trend is your friend. So it's your friend for as long as you pay attention to it, for as long as you pay attention to where price action is in relation to the trend, right? On the uptick here to the right, also, we see price action is above, all in all, is above the yellow moving average.